Good evening to everyone. The Honorable President of the ICI, Gupta ji, the Vice President, Honorable Vice President of the ICI Institute of Chartered Accountants of India, Neha Jamusaria ji, my colleague in the Council, Sansikar Chitre ji, and today dignitaries from the SEBI, Asa Sethi ji. We have Kenchi Yokama, Country Director, Iadb Bank. We have with us Srikant Viswanathan, Chartered Accountant. He is CEO of Janagra Center for Citizen and Democracy. And we have another guest, R.S. Murli ji, is the author of the book. And I welcome all of you for this one-day webinar on a roadmap for financial sustainability cities in India. This is one of the kind of program or seminar which we are organizing it on behalf of Committee for Public and Government Financial Management. I welcome all the participants into this webinar. I am extremely thankful to my Honorable President as well as the Vice President for taking out the valuable time. Atul sir was busy in the examination matters, and Neha sir also was busy, but he took out some time and attending this conference and going to guide all the participants. And today is also one of the best day for us, where we're going to launch our booklet on the municipal bond. This booklet is being published in 2018, and again going to be released today after the various development being incorporated and being supported by the Asa Sethi madam from the SEBI. Number of circulars being added from since 2018, being incorporated, and lot of change. नहीं अभी नहीं आएगा, मैं करूंगा बाद में. So this अभी नहीं, आप बंद करो ना स्क्रीन शेयर. Why are you objecting me again and again? So I am also thankful the dignitaries who joined this particular webinar. About this webinar, I want to mention that this is a program is required by all the peoples in the urbanization matter. A lot of urbanizations are happening and changing the profile of the cities and towns and increasing demand of the infrastructures. In this infrastructure demands, we need to have a cater all the demand by the money, and how the people can take the money in the municipal bodies, which are currently taking a demand from the internal accruals or short-term loans. They has to be depend on, they has to be see the long-term fundings, and long-term fundings can be through the municipal bonds, and the bonds can be raised in the market. And the SEBI has issued a number of guidelines and circulars how they can raise the fund. Till now, 7 municipal bonds has been raised in the market, and we are expecting a lot of municipal bodies going to raise in this circumstances to cater the need of the urbanization. And we have today entire gambit or the top speakers going to take the lead in this aspects. So without taking much of time, I'll welcome again everyone, all the participants. I now request my Honorable President of the ICI, Atul Gupta sir. Before that, Atul Gupta sir, I'll request my Honorable Vice President, Neha Jamusaria ji, to address the gathering.
Thank you, Dheeraj bhai. Honorable President of the Institute, C.A. Atul ji, the Chairman and Vice Chairman of this committee, C.A. Dheeraj ji, C.A. Chitle ji, the 3 panelists, Asa Sethi ji, Chief General Manager from SEBI, Mr. Kenichi from Asian Development Bank, and C.S. Srikant from Janagra Center. Let me at the outset compliment the Chairman and Vice Chairman for bringing out the second edition of the publication Municipal Bonds for financing urban infrastructure in India and incorporating all circulars which have been issued by SEBI, the latest circulars. Today's webinar, which is designed to discuss how Indian cities can be made sustainable in terms of infrastructure, which is normally provided by urban local bodies. And the crux of the matter is that all these urban bodies require huge funds to finance infrastructure facility, and gone is the time when these municipal corporations and urban local bodies were operating only on the subsidies given by government. Now they have started raising funds through municipal bodies, municipal bonds, and to raise funds and to attract investors in these bonds, the critical factor for all these bodies would be improving financial reporting practices. The committee has done well to bring out standards for the local bodies, and if these bodies follow these accounting standards, there will be uniformity in accounting practices and financial reporting will improve. At the same time, in all these local bodies, it is required to improve public financial management. And today the panelists will discuss as to how these bodies can raise funds and make all these bonds and offers for investment in these bonds attractive for the public. So if such webinars are held along with the urban local bodies and in the concerned officials are involved, this knowledge will spread among the bodies and it will facilitate them to raise funds and see that the cities receive the much required infrastructure which is necessary for the development of the entire country and its economy. So let me once again congratulate the committee for coming out with such webinars, and I am sure you will follow with roundtables and so many discussion panels on the subject. Once again, my compliments and thank you for inviting me today to speak for some time.
Thank you, Honorable Vice President, sir, for your gracious presence and the word of wisdom for the participant. Now I request Honorable President of the ICI, Atul Gupta ji. He is very passionate about this subject. He always worked for the public government financial management. He is the person who is instrumental for the railway equal accounting system. So he have the very vast knowledge of in this particular topic. So today we have the opportunity to have Atul Gupta ji in this webinar. So I request Atul Gupta ji to address all the participants.
Thank you, Dheeraj bhai. I believe that I am audible to everybody. Very good evening, the Honorable Vice President ICI, CA Nihar Jambu Saria ji, and all my distinguished colleagues, Dheeraj bhai, Chitle ji, Shrikant ji, Murli ji, Madam from SEBI and from ADB colleague. And all the viewers, a very good evening to all of you. And I'm pleased to be here in this very important webinar being organized by the Committee for Government Finance and related subjects. And a very important program being organized by the committee that is on the roadmap for financial sustainable cities in India. Friends, you will agree with me that the cities, or I will say the urban local bodies, or maybe the Panchayati Raj system is a very important pillar of our entire ecosystem. So we used to say that at the top level we have the central government, then the state government, and then comes the urban local bodies, the various cities, municipal corporations, and the Panchayati Raj system. So it's always a three-tier system, and it's a very, very important system. You all agree with me. There are a number of initiatives which have been taken by the state government, central government in past to make these cities and the municipal corporations more and more sustainable in nature. At the same time, there are initiatives being taken to develop more and more smarter cities in the country so that we can attract the investments, we can provide the quality of life services to the citizens and the other allied benefits which are there when the cities are more sustainable and they are the smart cities. So number of initiatives have been initiated by the various regulators, various developers, as well as even the Niti Aayog and other stakeholders. I just wish to share with you that a very important document in this line, that is the augmenting revenue for urban local bodies, was also being developed by the ICI in late it's around 2016-17, when we develop a booklet, a research paper, and share to the various stakeholders that how we can augment the revenue for the various urban local bodies. It was a research paper being developed by the ICI after the study of the various international experiences, and we presented that paper that how our urban local bodies and the city can develop the innovative way of financing for their sustainability. I just wish to share with you, for example, when we are talking about the cities or the highway, you are aware that we have a PPP model available, which is a very successful model with the NHAI. So you can see that all the highways are getting developed through this PPP model and making the things sustainable. At the same line, on the same line, we mentioned that there are number of innovations can be there for this PPP model in the other part of the activities of the smarter cities or the other cities or the municipal corporation activities. You must remember that recently the Honorable Prime Minister sir mentioned about the monetization of the asset of the Panchayati Raj system, so that we can generate the revenue from that particular activity as well. Now coming to the smarter city, that each one of you are aware that there is a dream project of every government that we should have more and more smarter cities. And as I mentioned that the smarter city not only provide the quality of life to the citizen of that particular city, but also enable the investment being getting coming to that particular city or that particular jurisdiction, because the better facilities and the better infrastructure is available. Now, at times you will find that when you are looking for a creation of a smarter city or a better city, you need the more and more funding. And for that, there is a new dimension which is getting developed, is something about the municipal bonds. And you will agree with me that there are the cases as well when the municipal bonds are released by one or the other jurisdiction, the various cities, and they are being very appreciated by as well. But at the same time, there is a whole lot of ecosystem which is required before you are bringing with the municipal bonds. You require the accrual accounting system, you require more and more transparent reporting, you have to showcase the future rate of return on the municipal bond, and so on. So what we have to do, that we have to study each of the city, because each city have their own dimensions, own infrastructure, own way of looking into the things. One city can be very well, like very importantly connected with the industrial town. So there will be the different aspect, I will say, the dimension of bringing the municipal bond. There will be certain cities which are very rich in the heritage or the tourism per se. So they will have the different perspective of the municipal bond. But what all we have to do to bring this municipal bond, what are these municipal bonds, how they help the particular regulator of that city, that how they will be able to generate the money, and what are the benefits to the investor of that municipal bond, is something, a complete ecosystem which we need to study. At the same time, I will just convey to my professional colleagues that as we are mentioning at number of times, that with the passage of the time, because our profession also evolved into the economic system. So more and more, whenever there will be the economic development, whenever there will be the innovative way of working, there will be the different way of working, there will be always a requirement not only for the growth, but also for the necessity that our professional colleagues adapt themselves to the latest requirement. And that is something very importantly rightly organized by the Honorable Dheeraj Khandelwalji and Chandrasekhar Chitleji, that they organize this program today to guide our, not only to the various stakeholders, but also our members, that what is their future in the municipal bonds, what is there in the future sustainable cities in India, and what could be the services they can offer. The chartered accountants are always being known for a partner in nation building. So in case our chartered accountant will develop the expertise, and they will be able to guide their respective cities that how they can develop the municipal bonds, what are the requirements of the SEBI, what are the support can be there from the Iadb, what are the various consult experts are available who can provide this kind of a guidance, what is the ecosystem which is required, what kind of a guidance is required to the various stakeholders, is something that we need to learn, we need to adapt, and then we need to disseminate to the various stakeholders. So I believe that this kind of a program will be very useful when we will be learning a lot from the expert. And fortunately, we have the Madam Asha Ji and the colleague from the Asian Development Bank will also be there along with the Shrikant ji and R.S. Murli ji, who is the author of this particular booklet on the municipal bonds. That the entire ecosystem, I compliment the Dheeraj bhai that he tried to cover all the 360-degree view of the around the municipal bonds in today's webinar. And as rightly mentioned by Honorable Vice President Sir, that very soon we will be trying to have one kind of a roundtable conference so that more and more cities, the person who are responsible for this entire ecosystem will be called for to disseminate and have a one-to-one meeting, so that let us have a target that if today we have the 50 smart cities or the 10 cities where the bonds are there, let us target that in the next 2 years we will be having the 50 cities which will be releasing these bonds with the support of our colleagues, chartered accountants, as well as the profession of the chartered accountants, that is ICAI. So I compliment. I have a lot of things to say, but I am aware about the timelines and the other speakers has to speak. So I will sign off here with the once again congratulations to Dheeraj bhai and all the team members.
Thank you, sir, for the kind of words. Just wanted to mention to you from various rail corporation as various smart cities and various municipal bodies are also viewing this particular webinar. This program earlier being associated with the Ministry of Urban Development, MoHUA, where the secretary were supposed to be joined today, but due to the urgency, he could not able to join. And this program being marketed well in the various municipal bodies, and a lot of municipal bodies are viewing this program. As ADB's, country head Yokoma is here, and a lot of rail corporation and other corporation also joining this program to view how they can take avail the benefits of it. So thank you very much, sir, for your kind word. Now it's time for release of second edition of the publication. So we want to have the gracious presence of my President, sir. So President, sir, from your side, it's we wanted to have this inauguration of this booklet, Municipal Bond for Financing Urban Infrastructure in India. So this is our entire booklet, sir. It's a revised.
Congratulations, Dheeraj bhai, and thanks to all my dignitaries who are present in this occasion of this launching of the second edition of this book on the municipal bonds by the Institute of Chartered Accountants of India. I believe that this booklet will be very useful, and thanks to the author and all the resource person who contributed into this research paper being developed by the ICAI.
Thank you, sir. On this occasion, we have R.S. Murli ji, who has again revised this booklet. So I request to him just say a few words in 2 minutes to the audience what it is covered.
Sure. Dear President Shri Atul Kumar Gupta, Vice President Mr. Jambusaria, Chairman of the Committee Dheeraj bhai, and Vice Chairman Chitleji, it's a real honor for me to be here and part of this initiative, particularly by this committee, and humbled by the opportunity given to me. The backdrop, as you are aware, the increasing pressure on local finances and local government finances have resulted, one side, the inability of the local governments to deliver proper infra and service. On the other hand, incidentally, it has been able to trigger some innovation in the way such requirements are getting financed. So two instruments get very, very important in this regard. One is the pool financing that was tried out and being tried out by some of the ULBs, and the other one is the municipal bond. Bond financing, when you come to it, it's an instrument of financing the local bodies, is of real interest to ICA and its members, as not only it makes the funds available, but as our President said, the requirements required to that are necessary to float these bonds makes them get the discipline in maintaining proper accounts, managing their finances, maintaining transparency and accountability, etc. Such become instruments of governance, and these get embedded into the process of bond flotation. So organizations that were without proper system and governance would slowly embrace the path of professionalism in the process of getting their finances. This research publication through this committee is important in this regard because it provides practical insight into what, why, and how of municipal bond, both from the practitioner's viewpoint and the beneficiary's viewpoints. The publication covers variety of important information relevant, like benefits, the types of bonds, risk and regulatory framework. SEBI's regulations here become extremely important, and the 2019 amendment and the notification and other circulars are also very relevant. And this time there has also been a proper technological interventions embedded into the into the regulation, which is extremely welcome. The publication also brings a case study of Pune Municipal Corporation, which successfully raised the bond. It covers rating of municipal bonds also, the methodology and approach, and it gives also an insight into the American municipal bond market, which is the sizable market after the New York Stock Exchange. The policy, process, people, and technology aspects of the municipal management relevance to the bond issue has also been covered. So it concludes with the role of ICAI and its members. This research publication is not an academic research publication. It's a strategic research for practitioners that is dynamic and will be versioned in the future based on the changes and requirements of the market. As a strategic document, it has been prepared in consultation with the major stakeholders like the local bodies, the SEBI, ICAI members, experts from the government, and so on. Since this has to be a dynamic document, I take this opportunity in requesting our president and ICAI that such publication henceforth be made in interactive PDF form and made available through our ICAI app, which is already there. This way, it will be current, cost-effective, and useful for the users. This publication was really enriched by the inputs provided by SEBI and the excellent insights and nuances shared by the Pune Municipal Corporation. In fact, the real content of this edition was provided by them. Credit also goes to Srikanth, who is here, whom you are going to hear soon. I very closely work in this sector, and CA Subbalakshmi from Hyderabad. These people shared a lot of their wisdom in initial stages of this publication. I conclude by thanking the real people who have made this publication possible, the encouragement by the the chairman of this committee, CA Dheeraj Ji, members of the committee who have given input, support by my good brother MP Vijay Kumar, excellent committee secretariat, support by the secretariat. I thank ICAIs and the president, the committee, and chairman, vice chairman of the committee for giving this opportunity to serve the profession. I am sure that this publication will really be useful to the readers. Thanks a lot. Thanks for this opportunity. Thank you.
Thank you, R.S. Murliji, for your initiative, and thanks for your authoring of this particular book and making some changes and every excellent book you coverage. So very thankful to you. And now I request my Vice Chairman Chandrasekhar B. Chitleji to have a vote of thanks to you and as well as the Atul Gupta ji and Nihar Jambusaria ji, and introduce the panel, and so that we can start taking for this program.
Thank you, Chairman, sir. Roadmap for Financially Sustainable Cities in India, a webinar that has been organized by Committee for Public and Government Financial Management and Accounting. I think the President in his remarks said that our former President Abdul Kalamji described chartered accountants as partners in nation building. Here we are actually surviving that partnership and really associating with our nation in its own building. Today at this inaugural session, we had gracious presence of Honorable President, Honorable Vice President, and also resource person for the publication which we have just released. That is about the municipal bodies, the bonds. And I'm sure the bond story as far as Pune is concerned will definitely make me more happy because I hail from city of Pune. I'm sure that other cities also will follow this example. We are thankful to Honorable Vice President Nihar Jambusaria ji for his address and the words of advice for the committee, and really for taking ahead this thought of roundtable conference. I'm sure that committee will definitely implement it. I am also thankful to our worthy President, CA Atul Kumar Gupta ji. I think none other than Atul Kumar ji would have been appropriate chief guest for the purpose of this session, because he has brought international laurels to the institute by his contribution in the sector of Indian Railways and the mammoth work he has handled about conversion of this accounting system to accrual basis. And as I said, that accolades have been received nationally and internationally for his words. So I think if he is present and if he is guiding us in this arena of sustainable financial cities, it will definitely encourage our committee to bring similar laurels to our institute by the contribution in this arena as well. And the publication which has been revised by the resource person, Dr. R.S. Murliji, who wears the hat of chartered accountant, cost accountant, company secretary, and has also held high positions in government and advisory roles. So definitely his contribution in this particular booklet, which we have just released the second edition, that will be very appreciated by the profession and will give insight. The assistance provided in this booklet by Srikant and Subbalakshmi, and also I think Anand Gowde, who was also having role in this Pune Municipal Bonds, he has also vetted this particular publication. So I take this opportunity to place on record for the appreciation for their contribution, and I'm sure that this is not the full stop, but this is comma, and your contribution in this arena will keep on flowing, and committee will definitely appreciate. And whatever new projects you think of, maybe you share with our dynamic chairman. He is always ready to have such programs initiated. Decorating this particular web podium is also Mrs. Asha Shetty, Kechimi Yokoyama, and Mrs. Srikant. I thank you for your gracious presence, and I'm sure that in the session to follow, your advice will be definitely useful for the professionals and the participants who have joined this webinar. So I declare that this particular inaugural session is concluded, and then we will start the subsequent session, which is on the roadmap for financial sustainable cities in India, in which there will be three discussions. One is by SEBI perspective, then multilateral funding agencies by Iadb, and how CAs can participate by Srikant. So this particular three aspects will be dealt with. So Mr. Chairman, should we start with this first initiative?
Yes, I think let's start with the...
Yes, just a minute.
I think we'll start with the Kenichi Yokoyama.
Okay, first we will be speaking, so I'll just introduce Mr. Yokoyama. Mr. Kenichi Yokoyama is country director for India as far as this Asian Development Bank is concerned, and he has vast experience in the field. Mr. Kenichi is the country director, as I stated, of the Asian Development Bank in India. Mr. Yokoyama joined Asian Development Bank way back in 1999 and has served in various capacities. Prior to joining India Resident Mission in April 2017, he was country director for Nepal Resident Mission from April 2012. Before this selection as country director Nepal, he was principal water resources specialist in Iadb's South Asia department and was responsible for developing water resources projects in South Asian countries, including Bangladesh, India, and Nepal. And as you know that the water is very precious resource, and his work in this particular arena will be definitely remembered by all those who are benefited by it. He earned the undergraduate degree in agriculture engineering from University of Japan and the master's degree in agricultural economics from the Stanford University of USA. I welcome Kenichi Yokoyama sir to participate in this particular seminar. and we are anxiously awaiting the words of guidance from you. Over to you, sir.
Yeah, thank you very much for introducing me. Can you hear me?
Yes, yes.
Yeah, so let me just first thank this opportunity and also congratulate the ICAI for this publication of the Roadmap for Financially Sustainable Cities in India. This is actually, I would say, a very important topic for India's urban development, and for us, India's urban development is really should be the driver for rapid economic development for India. So this, I really appreciate this publication now getting issued. So I'd like to make a short presentation about the Iadb's urban development perspectives, particularly focusing on the municipal resource mobilization aspect and what Iadb can support ICAI as well as other agencies at the state and municipality levels. So just let me share the slides.
Sure.
No, it's okay. Can we share the see the slide?
Yeah, we can see the slide, but it's not visible.
Oh, you cannot see the slide.
I think what you need, you have to scroll down. Something is coming, but it's not, appearing over here.
Yeah, we'll try one more time. Let me try.
We can see the screen.
Yeah, let me just first start speaking. Then I try to see. I have an assistant here, so he's working. So my talk is. Can you see?
We can see the sharing the screen now. It's your computer we can see, but not file, not presentation.
Oh, not the file. Okay, so let me just first start talking about my topic, and first let me say about the India's urban development challenges. So we know that India is at this moment 35% urbanized.
I think there's no voice, no. So I think let's Yukama is going to join in some time. Before that, we have with us Asa Setiji, who going to be discuss on the SEBI perspective. So I request CV Chansika Chitreji to introduce her. Though she doesn't need any introduction, she is from the SEBI side, and she is the Chief General Manager, and she's heading the Department of Debt and Hybrid Securities from the SEBI side. So, Assam, Madam, I'd like to bring you onto the, for in front of all the participants, 10-20,000 participants already joined over here. So, so from your side, what's your SEBI perspective in terms of this bonds, financial sustainability cities in India? What's your view on it?
Thank you very much. I would like to thank the Institute for organizing this webinar, It's a very fundamental topic which is very relevant in today's time. And the speakers before me have already highlighted what is the importance of these municipality bonds which we are having the regulations. So before I give some perspective on the municipal bond side, what we have done, I would just like to talk about the corporate market in general. So the corporate market outstanding that we have as of now, during 2012-13, it was around 3.7 trillion rupees, which has increased and become almost double to 6.9 trillion rupees during 2018-19. And if you calculate it as a part of our GDP, as a percentage of GDP, it has increased from 13% to 16% in 1920. So this gives us the rise which has happened in the corporate bond sector. With this background in place, and if you compare India vis-a-vis the overseas jurisdiction, we find that India is not way behind the developed markets. So corporate bonds as a percentage of GDP is 16% in India. And if you compare it to Japan, it is around 14%. The other countries which are, way above this are the USA, which is, at 118%. Given liquidity generally is seen to be very poor in the corporate bond market, but even here, if you take the daily trades as a percentage of our corporate bond outstanding in India, which is at 0.23%, is a far comparable better figure than Japan, which is at 0.05%, China, which is at 0.07%, and South Korea, which is at 0.20%. From the corporate bond development side, we have taken various initiatives like having the private placement in our EBP platform, which is a much more efficient mechanism for price discovery and also improves accessibility through fairness and participations. Now we're coming to the municipal bond side. SEBI had come up with these regulations somewhere in 2015. And though these regulations were there, not many municipalities have come forward. As the speaker before me has already mentioned, around 7 municipalities have raised through this mechanism. Around 1,300 crore of municipal bonds have been raised in the past. During our discussions with them, we found that there are certain difficulties which the municipalities were facing, because of which they were not coming forth to raise funds through these mechanisms. So after discussion with the market and having consultation paper, taking feedback from the market, in 2019, we have amended our regulations so that more and more municipalities get covered under the definition who are eligible to raise municipal bond. Earlier, our regulations mentioned that only municipalities under regulation 243Q of the Constitution are allowed to raise funds to our regulations. But after our discussions, we have increased it so that even the urban development authorities, city planning agencies, etc., pooled finance are also included in this definition of an issuer. Similarly, to ease the mechanism of issuances, many of the provisions which were earlier required, like appointment of a monitoring agency, a separate project implementation cell, maintenance of 100% asset coverage, requirement of a backing of the central government, etc., have been done away with, so as to enable more and more municipalities to come forth to raise funds. Similarly, in order to have investor protection measures in place, we have come up with an escrow mechanism payment to enable that the funds which are required for the payment of interest and the redemption amount are safeguarded by having a 4-layer structure. That is by way of having a no-lien escrow account, an interest payment account, sinking fund account, and a general account, so that the funds are earmarked and kept aside. Similarly, for giving flexibility in terms of the disclosure requirements which are there, what we have done is we have told the municipalities that they can prepare accounts in accordance with the National Municipal Accounts Manual or by the accounting standards as prescribed by the Companies Act, or the accounting standards and policies which are applicable to issuers in their respective acts. Similarly, we have also enabled a 2-step process for audit, because we used to find that in the case of municipalities, the CAG audits, etc., used to take a lot of time, and they were not able to file it with the stock exchanges as per the timelines which we have mentioned in our listing and disclosure requirements. So we have enabled them so that the auditor who is appointed by the CAG, they are allowed to complete the audit as per the timelines given by SEBI and file the records to stock exchanges. Subsequent to which the CAG can comment upon them, and then the final accounts can be published. Similarly, even after the 2019 amendments to the regulation, we still found that there are certain difficulties which the municipalities have been facing. So in this regard, what we have done is in July 2020, we have issued a guidance note to these municipalities so that the various doubts and clarifications which are needed by them are already put out in the public domain. So you may be happy to know that, recently we have already given our observations to one of the municipal corporations. So I guess they should be coming up with their final documents soon. And we have also received interest from 2 to 3 municipalities. I guess in the recent time, because of the COVID, there has been much more traction in this area. But going forth, we are expecting that this market to really pick up. Thank you.
Thank you, Asaji. Now we have our speaker from the Iadb country head person, Kenichi Yokoma, is now connected again. Request him to address the case.
Through alternative, can you just...
Again, you muted, sir, and your mic is mute, sir. Unmute
can you?
Again, it's muting. It's some button is there. Yeah.
So I'm connected to alternative computer. Can you just let me do a bit later? So the next speaker.
Yeah, sure. So we have our own fraternity person, CA Srikant Viswanathan. He is the CEO of Janagana Center for Citizen and Democracy. He going to deliver on the how CA can make the difference. As of now, there's a requirement of the funding in the urban area. Lot of guidelines being issued by the SEBI. Lot of ecosystem are going to be built up. Now it's matter of the chartered accountant. It's a duty for the chartered accountant to rise up and help to the nation and build up the nation in partner nation building and utilize the technical mindset of the chartered accountant, read the entire documents, what are the available, and approach to the municipal bodies and civic bodies or entire smart cities, and approach them and guide them on the various funding part. So request Chandrasekhar Chitleji to introduce Srikant Viswanathanji.
Yes, thank you, Chairman, sir. The biggest introduction of Srikantji is just now we have released publication about municipal bonds, and Srikantji had share in it. So to formally introduce him, C.A. Srikant Viswanathan is Chief Executive Officer of Janagra Center for Citizenship for Democracy. As far as this organization is concerned, he has joined in the year 2011 in the Municipal Finance Program. Srikant is one of the India's leading practitioners of city governance reforms and municipal finance reforms in India, particularly on application of systems, thinking reform agendas for cities. He works closely with senior leadership of central and state governments and constitutional bodies to shape and implement the long-term reforms to the municipal finance in India. He has been an associate member of the Institute of Chartered Accountants of India for over 17 years, and prior to joining Janagra, worked in banking and audit. I am sure that as a chartered accountant, we are keen to play a role in this arena of public finance and local bodies. And really the key to playing this role will be unlocked by and provided by Honorable C.A. Srikant. Over to you, Srikant.
Thank you. Thank you to everyone for having me here. I really think chartered accountants can make a huge difference to the area of making our cities financially sustainable. I may not be overstating if I said one of the principal reasons I believe India's cities today are not financially fully sustainable is because chartered accountants haven't got involved adequately as yet. So I'll first start by calling out some principal issues in municipal finance and then lay out a rationale for why I believe CAs can make a huge difference. So, as Janagraha, we worked in the area of municipal finance for the last 20 years. Mr. Murli and our organization have been partners and collaborators in this area for many years now. Currently, we work through a formal MOU with the Ministry of Housing and Urban Affairs on municipal finance reforms, spanning property tax, and also an online portal called cityfinance.in, which is a national municipal finance information system. We've just finished working with the 15th Finance Commission on a new model of fiscal decentralization for India cities, and we also work closely with the Office of the CAG of India on improving audit and accountability of ULBs in India. Besides this, we also have partnership with state governments like the government of Odisha on municipal finance. The three principal challenges before cities to make them financially sustainable, one is fiscal decentralization, which is cities in India today do not have visibility over or predictability over fiscal transfers that they get from the state governments and central governments. They also don't have powers over many revenue streams, like, for example, stamp duties and registration charges, or a share of GST, or even motor vehicle registration charges, for example. So state governments have not devolved several revenue streams which are related to cities, which are related to city governance, but have not devolved them to cities as revenue streams. The second challenge is on own revenue enhancement or revenue optimization, which is there are many revenue streams which have been devolved to cities, like, for example, property tax, but cities have not taken full advantage of them for a variety of reasons. The third challenge is the broad area that I would call as municipal borrowings, which is cities have not taken full advantage of the huge asset base that they have in the form of land and property, or also the general overall balance sheet size, and they have not availed municipal borrowings. I'm using the phrase municipal borrowings to mean a wide range of instruments, not just municipal bonds, not just pooled finance, but also it could be term loans, it could be working capital, it could be finance leases, it could be value capture finance. There are a range of areas through which cities can raise capital for urban infrastructure financing, but cities in India generally have not availed those opportunities adequately. Now, there are some challenges, well-known challenges of broad areas of urban governance structure in India and so on. I would say, due to paucity of time, I won't go into those root causes, like transparency and accountability, huge challenges in capacities, both quantity and quality of staff available in municipalities, etc. But I would only say that across these three pillars of municipal financial sustainability, of fiscal decentralization, own revenue enhancement, and municipal borrowings, financial accounting and reporting is a necessary but not sufficient condition. And I wouldn't be overstating if I said that financial accounting in India's cities is largely broken. I have seen the municipal financial accounting systems of Pune Municipal Corporation fairly closely, and the budgeting system as well. Of course, a few years before they issued a municipal bond. And I don't know how many of you have looked at the audited financial statements of Pune, which has issued a municipal bond. It has audit qualifications of 2 pages. So just because 6 or 7 municipalities in India have issued municipal bonds does not mean that all is well with either the financial position or financial performance of municipalities on one hand, or financial accounting or financial reporting on the other. So there is a lot that needs to be done to make municipal bonds or municipal borrowings market in India a reality. So the first step is in acknowledging that this is not a market that is working well. This market has been around for 25 years now. So 1995-96 was when Ahmedabad Municipal Corporation and Bengaluru Municipal Corporations floated their municipal bonds. It's going to be 25 years. And the aggregate issuances of municipal bonds in India is not more than 6,000 crores. And most municipalities, except for Ahmedabad Municipal Corporation or the Tamil Nadu pooled fund arrangement, none of them has actually been able to issue repeat issuances in a sustainable manner. They may have issued 1 or 2 bonds, but except for Ahmedabad Municipal Corporation and pooled issuances happening in Tamil Nadu. I don't believe any of the others have been quite sustainable. So there is a lot of work that requires to be done. And it is not time to celebrate any success. For those of you who are familiar with what happened with the Pune Municipal Corporation, you should be aware that taxpayer money was lost in the first 2 years because the underlying project, which was sought to be funded by the bond issuance by the Pune Municipal Corporation, that tender failed 3 times. And so for many months, the proceeds of the municipal bond issuance of the Pune Municipal Corporation was lying in a bank account, in a savings bank account, and net huge amount of interest was being paid out to bondholders, whereas the municipal corporation itself was not earning any interest on the proceeds and losing money. So it was not a model bond issuance at all. Basically, what can we do to rectify the situation? In our view, there are 4 things that need to be done to rectify the situation. The problem is not really of what needs to be done, right? At a theoretical level, India has the best finance professionals in the world, right? We have one of the best functioning markets in the world. We have an excellent world-class regulator in SEBI, etc. So the issue is not one of knowledge. The issue is of practice. So the 4 things that I'm going to call out are mainly catalytic interventions. They are not theoretical interventions. They are practical catalytic interventions. 1, we need few model issuances as lighthouses, right? After 25 years, we still do not know how to set in motion a virtuous cycle which can make these bonds tradable, right? So more and more cities come back again and again to avail municipal bonds. Today, municipal bonds are being issued by cities as a headline grabbing event, right? So when I'm a commissioner of a city, if the Prime Minister has put out a call and said, India should issue municipal bonds, I want to be in the headlines or I want my city to be in headlines, I issue a municipal bond. I get transferred after 2 years, the city loses interest. So therefore, 1, we need few model cities as lighthouses. In today's institutional arrangements, we need a specialized entity, preferably at the central government level, like for example, the National Infrastructure Investment Fund, which is capable of shepherding these lighthouse issuances. We need expertise from the private sector, from the private bond market, from the debt market to handhold this process. Governments will not be able to do this alone. And the National Infrastructure Investment Fund is a great example of an entity that has been incubated and funded by the Government of India, but with autonomous functioning, with huge private sector involvement, which is able to do this. They, of course, do this in the equity side, but their expertise in this would be very helpful. We need a specialized entity that can handhold 5, 10, 15 cities to issue municipal bonds in a copybook method, in a repeatable way. Second, we need an information marketplace. Information is what builds trust between market participants. We know how in the private sector, because of a cadence of accounts being generated on a quarterly basis or on an annual basis and being audited and put out under Companies Act and under SEBI regulations, trust is getting built. And there is an ecosystem of analysts and other players who ask questions, who ask tough questions on behalf of investors to companies. And that builds accountability. That builds trust among investors, and so they're willing to invest in this. And when that trust is getting broken, either because of examples like Satyam or with what has happened recently with Navaan housing and other examples, that is taken very seriously by regulators, right? The bar of accountability in the private sector is very high, whereas in the public sector, we are willing to tolerate a municipal bond issuance by a municipal corporation having a 2-page qualification. Can you imagine any private sector entity in India able to tap the bond market if they had a 2-page audit qualification? Why should the bar be different? The bar, in fact, should even be higher. Because remember that private sector entities have very few shareholders. Whereas, as my co-founder used to say in the early days, every citizen of a city is a stakeholder in the city, is a shareholder in the city. And unlike a private sector entity, you can't sell the shares as long as you live there because you have a stake in the city. So the bar for the public sector should even be higher. Whereas due to pressure from various quarters and due to the need to have more and more issuances, SEBI in fact dropped the bar from the initial regulations that were set and has been diluting the bar, saying, okay, municipalities don't have the capacities, let's dilute the regulations required for them. The bar for them should in fact be higher. And remember that private sector entities in India are fairly complicated. They have branches, they have subsidiaries, they operate in multiple time zones, they operate in multiple currencies, and they have to follow Ind AS with very complicated accounting standards. Municipalities in India don't have any of those challenges. They work in one city, they work in one time zone, they work in one currency, right? So it's a fairly straightforward accounting system. And I can say this fairly authoritatively because we've seen this closely.
So here, my question to you is why in India we are failing to raise more and more civic body to raise the capital in the municipal bond? Why only we have all governance, we have all rules and regulations, and SEBI has came out various all ease of doing all the in the issuance of bond. Why still the civic body is not coming up into the raising the fund when they are required fund, but they are not coming to the market? Why it is?
See, they don't have adequate own revenues. So there is a structural problem that cities in India, including the largest cities, barring probably the Mumbai Municipal Corporation, which has a very large balance sheet, and which has a huge, investment base as well of fixed deposits, etc. No other city in India, including Pune Municipal Corporation, has adequate own revenues commensurate with its expenditure obligations. There is a high degree of dependence on state grants and central grants, and many of the cities, in fact, use those grants to pay salaries, right? Many of them default on their own salaries. Our analysis shows that the long tail of there are about 4,500 municipalities in India, out of which more than 90% of them do not have adequate own revenues to cover their own operating expenditure. So the onus is really on state governments. State governments will have to make those cities financially sustainable. The first step is for states to give them adequate financial powers. So there is no point in blaming cities that they are not coming forward, because today cities hardly have any powers. They are under the thumb of the state government.
No, we have the PPP model. We have the PPP model. The state can come up with the PPP model and can generate their own revenue.
No, the PPP model essentially needs credit worthiness, right? The counterparty has to be credit worthy. Today, municipalities in India don't attract that kind of trust and credibility. That trust has to be built, which is the point I'm trying to make, that there has to be a municipal information marketplace. One of the projects on which we are working with the Ministry of Housing and Urban Affairs, and that portal is already live, all of you can go and take a look at it. It's called cityfinance.in, cityfinance.in. It currently hosts 3,000 financial statements in a comparable format of close to 2,000 ULBs in India. It's the first time in the history of independent India that such an exercise has been done. But we need all 4,500 cities in India to produce audited income statements and audited balance sheets on time. And that information needs to be...
Yes, Srikanth. So what role, city finance will play in it? What role is going to play in it, in the ministry as well as the
city finance will be... Yeah, so City Finance will now be the de facto national municipal finance information system. And under the 15 Finance Commission grant and under Atmanirbhar Abhiyan Bharat scheme, where states have got access to 50,000 crores more of additional borrowing limit if they follow property tax reforms, for both of them, City Finance will be the portal. Now, but the important thing in the municipal bond context is City Finance in the next 1.5 years will list every single municipal project in the country and will create a marketplace where those municipal projects can be linked to interested investors and lenders, somewhat similar to the India investment grid. All of you may be familiar with the National Infrastructure Pipeline, which is a huge project which has been launched by the Prime Minister and the Finance Minister of India. We are creating a mirror of that for smaller projects. We are creating a municipal investment grid where City Finance will act as the marketplace where municipal projects can be linked to interested investors and lenders. It will take about 2 years to achieve that. To begin with, we are focusing on comparable financial statements. One of the other challenges is today there are 28 different formats, minimum of 28 different formats in which municipalities present their balance sheets and income statements, because they are subject to state municipal acts. Unlike companies which have a single governing legislation, or if you also consider banks, there are probably 2 regulations, 2 or 3 regulations if you consider companies, insurance companies and banks. In the case of municipalities, there are minimum of 28 different regulations. Each state has its own regulation. In many cases, There are multiple laws governing different municipalities within the same state. So even two municipalities within the same state do not have comparable accounts. So how will the market get trust in it, right? So to achieve that, City Finance will create a comparable framework. The third important reform is the SPVs at the state level have to be energized. I do not believe that individual cities in India today have the capacities or the skills to float their own municipal bonds. 3, 5, 10 municipalities may be able to do that. But on a sustainable basis, we need to tap into specialized entity like the Urban Infrastructure Development Finance Corporations. More than a dozen states in India have incorporated UIDFCs, but very few of them are functioning effectively. Tamil Nadu is probably the sole state which is using these finance intermediaries quite successfully. Karnataka did it once many years ago, but many of them become mission directorates or routing agencies. We need to re-energize these SPVs and make them responsible for pooled finance or for statewide capacity building. Otherwise, transaction costs are not worthwhile. Many of the municipal commissioners are telling us that transaction costs for municipal bonds are too high for them, that they would rather borrow from banks as term loans from their own respective cities. The fourth reform is on fiscal responsibility and budget management. Today, cities, while states and the center have FRBM regulations, which clearly articulate the need for a medium-term fiscal plan, cities are not required to have multi-year financial plans. They only are required to have annual budgets, right? Which is bizarre because many of the infrastructure and service delivery requirements in cities are multi-year. They should ideally have a 20-year long-term finance plan and a 4 or 5 year medium-term plan. But they're not required to do that. They only prepare annual budgets. So investors and lenders are not clear about the future plans of these cities. What are the projects that you're going to invest in? What are your revenue projections? When they ask them this, there is no regulation that requires them to produce these in a credible manner. So that is the fourth reform. So the 4 reforms, we need few models as lighthouses. We need a specialized entity like the NIF to do this. We need a national marketplace of municipal finance information. We need state-level SPVs to be re-energized, and we need a regulatory framework on municipal borrowings for India's cities, including mandatory medium-term fiscal plans. Now, what are the areas where chartered accountants can help? Chartered accountants can help in many areas. I will call out 4 areas. They can help in internal controls and processes. They can help in drawing up project financials. They can help in accounting, and they can help in audit. But more than this, remember that today, cities don't even understand markets. Chartered accountants understand municipalities or understand corporate organizations, right? I'm calling municipality as a corporate organization because it's incorporated. Chartered accountants have a very evolved understanding of organizational systems and processes, laws, both finance and accounts. So they are very well placed to make municipalities market worthy, to take them close to the market and engage with the market, because chartered accountants are doing that in the private sector. The only set of professionals today in India who are capable of replicating their private sector experience in the public sector are chartered accountants. But what are the ingredients? What does the ICAI have to do for this? And what do CAs have to do for this? There are 3 things I think the Institute of Chartered Accountants has to do. The Institute of Chartered Accountants of India has to raise its profile and credibility with the Ministry of Finance, with the Ministry of Housing and Urban Affairs, and with state governments. Today, the ICAI is focusing a lot on the private sector. But remember that the amount of money that is spent by the government of India compared to the amount of money that is spent by the corporate sector is many, many times higher. For the next 20 or 30 years, the governments in India will spend a lot more capital, right? So if the chartered accountants can strengthen government accounting, government finances, public sector finances, there is a lot more return in it for chartered accountants. There is a lot more return in it for India. You cannot be partners in nation building by only servicing the private sector, right? Now for the last 5 years, I've only heard 2 examples from the Institute on public sector. One is conversion to accrual accounting of railways, and the other is accounting manual for NDMC, right? There are 4,500 cities in India. There are more than a dozen urban infrastructure development finance corporations, right? There is more than 4 lakh crores that is being invested over a 5-year period in urban infrastructure in the country. The question to ask is, what is the Institute of Chartered Accountants of India doing in helping governments raise finances for this kind of requirement and also establish financial accountability? Nobody is doing this. I'm not blaming the institute. Nobody is doing it. I'm saying that the only people capable of doing this are chartered accountants. But the institute has to raise their profile, build credibility. Today, Janagraha has an MOU with the Ministry of Housing and Urban Affairs. Why does the Institute of Chartered Accountants of India have a formal MOU with the Ministry of Finance and the Ministry of Housing and Urban Affairs to support them and handhold them in revising the National Municipal Accounting Manual? The National Municipal Accounting Manual is 15 years old. It is a 20th century manual in 21st century India. It's only the institute which can do it. Second, we need to make, let me just finish, Dheerajji. Second, in order to raise credibility, these ministries have to look at public finance as a profession. So if the Institute of Chartered Accountants of India can promote public finance as a meaningful full-time profession, I think that will be of great interest. Because remember that even senior IS officers don't understand markets. They don't understand the job that chartered accountants are capable of doing. There is a huge information asymmetry there. They think chartered accountants are only accountants. They don't realize the full range of services that chartered accountants are capable of producing. Therefore, we have to position public finance as a credible career for chartered accountants and as a credible area where institute and chartered accountants can add value. Lastly, one of the challenges that I see is every year they see new faces from the Institute of Chartered Accountants of India, right? The design of leadership of the Institute of Chartered Accountants is such that every year the leadership changes. But that is too complicated to change. But if the Secretariat of the Institute of Chartered Accountants of India, if there can be a permanent establishment within the ICAI that is able to engage with these governments on a continuous basis, that will be helpful. So that the people interacting are not different. And there is institutional memory that, because you know how slow the government is. It takes 3 to 5 years for substantive agendas to fructify. It's important that there is a permanent kind of establishment within the institute to deal with the government. So I will stop here, Dheerajji. Happy to take questions.
No, I just wanted to supplement you on this part of the chartered accountant. Very rightly mentioned by you all the points. It's only the chartered accountant can work on to the hands holding to the all people and municipal bodies to support them for the financing needs. Here I wanted to just brief you. We started the certificate course on the public finance management. Where about we had 4 batches, 5 batches we completed, and we're around 1,000 people are being trained on various accounting and public finance aspects of the government. So very ready, these people can definitely serve to the nation, and they are trained people, and they can give the requirement for the municipal bodies, civic bodies, and other for the financing need. Definitely lots need to be done. And as rightly mentioned by you, there's a political will, and the municipal in the different states we have the different laws. And rightly mentioned by you, the Navaan, which came on 2002, and it's still pending. In the ICI level, we have come out the IPSAS based accounting standards. It's called ISB, ASLBs. We came out. ICI is the only body in India. We came out all accounting standards based on the IPSAS. No other bodies has there till now. We in last year and this year 12 accounting standards last year and 3 accounting standards this year. So we are completed all accounting standards. But here the problem is that the government, the central government, the state governments are prescribed with their own laws, which they have their own manual. In the central government they have the Navaan, and the state government has the different their own manuals. Just here, sir, in Navaan came 2002. From last 2 years, from 2019 onward, we are changing the ministry. They understood the idea. We presented them the change is required in the Navaan, in the perspective of the IPSAS-based ASLBs. They accepted it. Now the slow process, this pandemic hit, and that's why it's become a drill. And I think maybe this coming year we'll start process again, going to amend. Just wanted to highlight you because you specifically mentioned Navaan, and especially giving the answer. That work is going on. ICI is amending the Navaan based on the municipal MOUA. So apart from that, we are also working in the various state government to amend the various state laws like Bihar Municipal Manual, even Jharkhand in the Chhattisgarh. So these areas which we are developing, and in last year you might be part of it, you were part of it, the Delhi conference, where we organized a conference about 600 people were there, government bodies were there. So we are sensitizing the issue, we are aware of it, we are helping with the government. Now the government part of it to come in the same manner where the ICI is working on. Surely we'll take up your matter in the later part. Now it's time for the Yokoma. He's waiting since long, so I'll take up his word of wisdom first. Then we'll have the question answer with all of you. So now
just before we go to Mr. Yokoma, I just want to add, since Mr. Shrikant mentioned that SEBI has relaxed the norms, I would like to correct him that we have not relaxed any of the regulations. Though we have done away with certain requirements, we have put in place a debenture trustee who will be responsible for all those roles, etc. So our regulations have not been relaxed in any manner.
It's called ease of doing the business,
right?
Not
yes.
It's ease of the.
We are ensuring investor protection. We are ensuring investor protection. That is the main thing, which is the SEBI's focus. So that is being looked at.
Yes. Now it's over to
just to supplement that even when we talk with government officials, commissioners, etc., about this accounting standards, etc., they said first let our people understand accrual basis, then we will come to it. So even our request for conversion to accrual basis is not finding favor with the government offices. And chairman, you know how dynamic he is, but his relentless efforts are not meeting with the desired response. Maybe whatever this memorandum you mentioned with the various ministries, I think with the help of your August office, we will be very happy to do that.
So I'll add over here my Chitri sir. I request the ADB, Yukomaji and the Srikanji, just give your hands holding together also on the finalization of the accounts, actual system. We are working with the government. We are in all state government. We are mandating that you follow the accounting standards, which already came out by the ICI. Become this mandatory. Utilize this. Why the state governments the act is not amending? Why the central government act is not amending? Just we want your support also. So with this, I'll take up this matter to the Yokoma. Please, over to you, sir.
Yes, thank you. Let me try again for this slide first. Not working. It's going. Can you see the slide?
No.
Okay, then just forget about this. Yeah, let me just say, I wonder where I was cut off in the previous round. So I just want to say first, India's urban development needs. So the country has probably
now I can see the presentation. We can see the presentation.
Okay, so let me just try. I cannot do it. Yeah, okay, so let me just say investment gap of Indian urban sector. So it's about 40 lakh crore between 2011 and 30. So that means about, say, 2 lakh crore is needed for Indian urban infrastructure to develop. Another report is that India requires 2% of GDP. So that means almost almost 3 lakh crore. So somewhere between 2 lakh and 3 lakh crore is needed for India urban sector. Whereas I think the present level of investment remains something around 1 to 2 lakh. So there's a huge gap that India needs to almost double or triple the investment. And in order to do that, a lot of resources have been mobilized. So 15th Finance Commission is moving ahead for some recommendations, and some states as formula-based devolution, and Municipal Bond has been mobilized for Pune, Hyderabad, Indore, Bhopal. So in that context, accrual accounting is necessary, and so on and so forth. But overall, I think one gap is really the municipal resource mobilization. And one report I remember published by World Bank says that India's municipal resource mobilization is just about 0.7% of GDP, whereas the BRICS peers, the South Africa, Brazil, and other BRICS countries, usually mobilize 5% or 6% of the GDP as municipal resources. So there's a huge gap and opportunity that India needs to tap. So that's something that I think what I say, that this seminar is quite relevant, and this new publication is quite relevant. And for this, Iadb is also trying to help the state and the central government to this direction. We provide sovereign loans, and we can theoretically also provide non-sovereign loans to the municipalities if they can, have the borrowing capacity and credit worthiness. But unfortunately, this is still a big way to go. And Iadb not only providing infrastructure finance, but also on the capacity building, on the urban development policy and plans, and capacity of the ULB's devolution process, and financial sustainability through tariff tax transfer mechanisms, and so on and so forth. And one critical constraint in mobilizing the municipal resources is the revenue. So unless and until municipalities are able to mobilize substantial amount of revenue in a accelerating manner, it is very difficult for the municipalities to mobilize the resources, as mentioned by the other panelists. So what we have been pretty much advocating is trying to shift the pursue some sort of a paradigm shift of urban planning and development. So the present pattern of urban development is upper side. It's a sort of a ribbon-based horizontal, sprawling of urban development. And this is a very inefficient way of urban development in terms of resource mobilization. So you need more infrastructure to cover, this wider urban areas. And also the revenue mobilized from this pattern of urban development is quite inefficient, very, very low. And this also causes a lot of congestion in terms of, this mobility requires a lot of private vehicles, and that causes the air pollution, environmental degradation. So this is, happening in many parts of the world, including India. But we are advocating more on more sort of systematic urban planning, using the urban transport systems as the basic framework or network based on which the station areas will have a systematic urban land use planning, building code regulation relaxation to motivate more vertical development. That can really enable the very much needed urban resource mobilization. A lot of property tax can be mobilized, and the infrastructure can be more efficiently placed, and this is environmentally friendly because less people will use private vehicles. So we are trying, particularly working together with metro projects, advocating this kind of a systematic urban development, and try to create the win-win situation. So the land use planning, attracting more vertical level of development, that creates lots of urban revenue, based on which municipal governments can issue more and more bonds, because they have more bigger revenue stream, based on which bonds can be issued. So this is a kind of idealistic type of development. I think Mr. Amitabh Kant usually said, he wants to see, vertical urban development. This is a kind of, idealistic way that we should really promote the state government and also municipalities move forward. So this is one way that we are trying to motivate together with urban ministry and state governments. So what we are doing in terms of, as a part of, capacity building and also our engagement with the municipalities. So what are the expectations from ADB when we are get engaged in the, municipalities and the state government in terms of financial information reporting? We have a audit report requirement at the project level as well as the entity level. So project level, we have a transaction, records about the project implementation. But I think in the context of this conference, also pretty much needed is the project entity finance at the municipality level. So this, what we call this annual entity financial statement. When we engage in the municipalities, we help them to strengthen their system of preparing annual entity financial statements and accrual-based accounting systems, and also more sort of stringent financial management across the municipalities. So timely preparation and submission is one sort of yardstick that we help, and we also sometimes support the quarterly financial statement mechanism so that they can, be trained as we work together with our projects. So so this is a kind of summary that I get from our team, requirement of entity financial statement, so a statement balance sheet. I think this is something that you are quite familiar with. So statement of income and expenditure, accounting policies and notes of accounts, and so on and so forth. So I can send, I think our staff has sent these slides, please share as necessary. And the area of, finally, the area of capacity that we can provide support. So we can provide development of integrated computerized system for service delivery for citizens and the proper management of municipal accounting functions and revenue improvement mechanisms. As I said, property tax, digitization of the records, and so on and so forth. And then capacity building for the municipal personnel in the use and maintenance of the systems, and capacity development cadre of municipal accounting staff to provide sustainability to the accounting reforms, and capacity building of the statutory auditors of urban local bodies. And finally, support for centralized reporting of financial information of urban local bodies toward reporting to state and the central levels, so that center can provide handholding support and capacity building activities. So those are some kind of activities. So we are definitely in the urban development space, and not only providing infrastructure support, but I think our role also provides, financial plus elements in terms of municipal URBs, capacity building, and hopefully trying to help them create a sort of virtuous cycle of, more and more revenue generation, attracting more private capital, so that ADB doesn't have to provide the sovereign lending, more on private sector lending or facilitation. So that's a kind of approach that we are trying to support the government, and hope, and I think our staff is regularly in touch with ICAI, and we are also keen to have a partnership with you and to try to work together for the systematic development of the systems of Indian urban space. Thank you very much.
Thank you, Yukoma. I rightly mentioned your Krishnendu Sarkar is very much in touch with the ICI all the times. He's also in our committee. He's guiding us in various fronts. We also had a various program on seminars on the ADB, how the ADB's capacity building program by the ADB to the chartered accountant as a consultant. So definitely. So here my question to you is, what is your expectation, being as a ADB from the Indian cities with regard to providing financial information or project performance report provided to them?
Yeah, definitely. When we, partner with the state government, be it urban department or PHAD, and then onwards we partner with URBs. So when they are engaged, definitely there is a requirement at the project level financial statement, as well as the entity level financial statement. So we would like to see at least project level implementation is, financial management is properly, recorded, reported, and internally and externally audited. And that's not only the project, the implementation level, but we would like to see also the, municipality entity level, this financial management is properly done, fully establishing accrual-based accounting mechanisms, systems, and so. So that's something that, unless and until such systems are established, we cannot expect those partners to become, really kind of advanced municipalities who can move ahead to start issuing bonds and provide better services.
One more question to you, sir. What kind of funding is provided by the Iadb to Indian cities? And what type of steps are being taken by the Iadb to financially empower Indian cities?
Essentially, the primary mode of support is providing loans to the state government through, Central Department of Economic Affairs. So once the State Finance Department receives the loan, they sometimes channel it direct to, to the departments and municipalities as loan, but also they use it as a revenue to state finance, and then they provide budgetary support to the departments and municipalities. So they implement the project in accordance with the government's and Iadb's procurement and financial management standards. So that's one primary way, but we can also provide, financial intermediary loans. Like I think Tamil Nadu, there is the financial intermediary established. So at this moment, we are providing loan with the state government's guarantee. So center borrows from us and then channel it to the state, and state, provides guarantee to the central government for this financial intermediary in Tamil Nadu. But once this intermediary becomes financially, creditworthiness becomes much stronger, then there's a possibility of we can provide, direct non-sovereign loans to these entities. But also there's a possibility we can, also lend to some public sector banks and public entities like HUDCO as a loan to them, and they also invest in the urban infrastructure through direct loan channeling. So those are kind of avenues that we have at this moment.
Okay. So my question to you again is whether are you investing in the smart cities announced by the central government?
Yes, I think some of our state state project channels through DEA and state is used for the smart city investments. I think this is the case for Tamil Nadu, and we have a case now in Agartala. But also at the same time, we also try to work with Ministry of Urban MOFUA regarding the possibility of financial intermediary lending to smart cities. So one possibility, one option is like if HUDCO is interested to partner with us and provide lending to smart cities, and if there is credible, a sound repayment mechanism is established with say state guarantee or something, there's also a possibility to. So we were trying to explore. We think that the smart city is a great opportunity for everyone. So we try to find the space for us to help them to establish a kind of a funding channel and repayment channel established.
As you have seen that in this pandemic, a lot of opportunities came up, and new technology has emerges. A lot of technology use we started, like we also having rather than a one-to-one meeting, we are also meeting in the virtual mode. So in this arena, what is what the possibilities development pathway that India can choose to make Indian cities financially empower through technology. So what the importance of the technology going to be there, how they can use, how what's your your thought on it?
Yeah, I think anyway, India is already quite advanced in terms of digital and information technology. And definitely, urban development has a huge scope for, tapping this opportunity of digital technology and make the system much more and more efficient. So definitely, as I said, this property tax mobilization, GIS-based record, I think being developed, and we can link it in various ways. We also, try to establish more sort of, the flood forecasting warning system of Indian cities. We are applying it in Kolkata, established the system with the municipality. And we're also in dialogue with Tamil Nadu, with Chennai, a similar, remote sensing-based flood forecasting warning. So there are lots of opportunities, and definitely this COVID-19, kind of motivated everyone on the great opportunities of use of digital technologies.
Financial, recently the Prime Minister Modi has announced that blockchain technology can be emerge in India in larger sense, and this technology can be for accountability and responsibility manner. So how you see a blockchain technology into the public management system can integrate the entire pan-India basis rather than be a state basis? What's your thought, and how you wanted to fund these all ambitious projects?
Yeah, I think this blockchain is a great sort of platform for municipal level accounting systems. If you can integrate it to all the municipalities, to the state level, and then at the national level, it's a great opportunity. I think we'll be quite keen to work on this.
Yes. Now my question to the Asa City, ma'am. As you already had a talk on the SEBI perspective, SEBI has issued number of guidelines in 2019. Recently, you mentioned about in July itself, the SEBI came out the guidelines, FAQs on the municipal bonds. My here question to you: why only 6 or 7 municipal bodies came for the funding? Why not more? What SEBI are doing for, like you have mentioned, for a lot of ease of things you started. What is your thought on it?
As I already mentioned in my talk, based on the discussions which we've had, we've tried to streamline our regulations by bringing these amendments in 2019 to help these municipal bodies to raise the funds from the bond market. Subsequently, going forward also, what we find is they find it more difficult to come up with these continuous disclosure requirements which we have put in place once they have raised the funds. Because this Pune and all who have already raised funds, we find that they always come and tell us that okay, these requirements which are there, we find it difficult to comply with. But be that as may be, the guidelines which we have put is more from the side of the investors who have invested in these bonds, and they require these disclosures to be made to them from time to time. So there we cannot give any kind of a relaxation. So to help them to do it, we have come out with these guidance note which I mentioned to you, which we have already issued. Going forward also, in case we find that okay, there are certain requirements which we can try to enable for these municipal bonds to come out with their issuances, we can definitely look at it. But I think the changes which you have already done should help most of the municipalities to come forth and raise the bonds in the debt market.
Srikanth has said that, we need to have a standards, we need to rise up on it. So why not, like in various states having the different manuals and different standardization of the format on the accrual system and reporting system. And SEBI definitely wanted to have a perspective. Why not SEBI issue a guidelines, these accounting standard issued by the ICI, the ASLBs to be mandatorily required by the all bond, the municipal bodies to raise the funds. Why you not issue that statement so that all the people start following the requirement of ICI, and then the standardized format going to be there and they can raise the fund?
These municipalities are governed by their own state laws, etc., which are there. So I don't know how easy or difficult they may find to shift to the ICI norms, which are obviously, of a higher governance standard. But as I mentioned to you, because they are following a certain way of accounting, they are finding it difficult to raise funds. So we have given them the leeway that, okay, in case you are following your national accounting rules, you can do that. In case you're a corporate, you're following Companies Act requirements. I think that is where ICI comes in. That is also allowed. So we have given them various 3-4 parameters. You comply with any of these, you are allowed to come and raise funds. We cannot have one set of guidelines that you follow this, only then you can come and raise funds into the market.
I'll come this question to the Srikanth again, but before that, I'll make you a question. When the SEBI can come up the guidelines, whatever the norms of the companies are there, what are the norms of the people are there, SEBI requires the standards which has to be maintained. See, if I have to come to the door of anyone, I have to follow that standards, SOPs of that house. Okay, suppose if I have to come to your SEBI, I have to follow the SOPs for the SEBI to raise the fund. So same way, I am asking you, ma'am, because the very rightly mentioned by the Srikanth, various stakeholders have the different thoughts. They need accounting and transparency in that financial statement. And accounting and transparency come only with the standardization, and the standards come only where the updated international adopted system are being followed. And when only the body in India, only the ICI can come up with standards. When then SEBI as like a regulator, ICI is also a regulator. So why not SEBI can prescribe for the requirement of the funding, you have to follow this standard. Like for the net worth guidelines, everything has been SEBI. So you can also come up. I know that I met one of your colleagues on 2019 to say the same thing in the SEBI. You have to follow the ASLBs, excluded by the ICI. The same matter is being raised by the Srikanth that because various state governments doesn't know about the actual accounting. In the various state governments, not even updated their manuals. Reason being that these are very old. Jharkhand, today in the morning, I was meeting with the Jharkhand. They has not started. They are still following in the cash basis system. So in that cash basis system, how they can come up raise the finance? Ranchi is one of the largest city in the Jharkhand. They wanted to raise the fund. They cannot. So we are, SEBI himself, debarring all the people to raise the fund because they are incapable to follow the standardized formation. So these are the point. I think, Srikanth, what's your view on this point?
As I mentioned, because of these legacy issues which are there, we are right now not prescribing that this is one standard which the municipal corporations have to follow to enable them to raise funds to the SEBI disclosure regulations which we have put in place. We have mandated 4-5 parameters. If you are following the accounting norms as per those, Companies Act, which I guess you will agree with it, which is a robust practice which is there. The National Municipal Accounts Manual, which has been adopted by the state, because there are certain requirements which we cannot change from being at SEBI. So what we have done is to enable them to raise funds. These are the 4-5 accounting standards. If you follow, you can come and raise funds through our regulations.
Yes, very active. Very active. Chitte sir, mute yourself. So, mute yourself, sir. Mute yourself. So, Asaji, very rightly, definitely Companies Act, but for the municipal bodies, Companies Act doesn't apply. Smart, lot of this is a quasi-judicial body. Same way, Namam is updated till 2002, not updated till then. It's 18 years old. My humble submission is this platform. I'm requesting once again to the SEBI to revisit your criteria and look at the alternative options so that investors can easily see the potential and can invest in the market. So I now switch over to the Srikanth. Do you want to add on in any point? What your thought on this, which I was discussing with the Asasa?
So I think really the key actor in this is the state government. Because the municipal acts are legislated by the state government, most of the municipalities are substantially dependent on state governments for support of different kinds. Most of the leadership of the municipalities are commissioners who are again, deputed by the state governments. So I think a huge responsibility is on state governments. But the challenge also is that within the government system, because the central government and state government follows cash basis of accounting, there is no deep appreciation of the value for accrual-based accounting. They think it is some, procedural back-end kind of activity. They don't see the value that unless you do accrual accounting, your ability to have a balance sheet and then use that balance sheet to raise resources from the markets, from different kind of investors and lenders will be limited. That understanding has not seeped in yet. So I think there's a lot of communication, there is a lot of engagement that is required with senior leadership, particularly in state governments, but also to a certain extent in the central government that is required to tell them about the practical benefits, of engaging chartered accountants in an activity like this. We had advocated very strongly with the 15th Finance Commission to mandate audited annual accounts as a mandatory condition for ULBs, and that was accepted, which is what Mr. Yokoyama also called out. We are hoping that that becomes a trigger for most of the cities in India to mandatorily adopt accrual accounting. Because what now happens is a lot of money is dependent on them submitting audited annual accounts. Remember that even in the 14th Finance Commission, there was only 20% of performance grants which was allocated for this condition. But right now it's an entry condition, which means if cities do not submit audited annual accounts from next year, they do not get even 1 rupee of Finance Commission grants. That's going to pinch them. Here is a great opportunity for chartered accountants to move in and take advantage of this. One other thing, Dheerajji, is if you draw parallels from how accounting standards became mandatory for companies, if I remember right, that was a very late entry into the Companies Act under the then section 211(3)(c). But that was a late entry. But I think the initial reason why companies were adopting accounting standards were because chartered accountants who were auditing those balance sheets, right, started kind of insisting that even though accounting standards are not mandated by law in the Companies Act, as a professional I am required to practice it. So I think if you are able to put
here I want to mention that we recently in the last council meeting we mandated 2 accounting standard ASLVs mandated, which going to be applicable after 2 years in 2022. Okay, so ASLVs cash and borrowings. So 2 accounting standards mandated, because you mentioning the same thing which I am replying to you. You were saying the same thing which we already did.
Yeah.
So now here my question to the Yokama sir. So what are the prudent practice for stability and sustainability of financial sector in Indian cities? So what do you feel it Indians in sustainability of the financial sector, stability? What is the practice or the prudence practice are there?
I think our sort of experience is, I would say, quite mixed. So we engage, the largest engagement is Kolkata. I think they are very established and definitely, go ahead with more advanced way of, doing urban development works. But then we have also engagements in small towns in, let's say, Madhya Pradesh. So there, it's like, we have to provide very intensive hand-holding support. So, but on the other hand, there's also a lot of I think the bureaucracy level, state by state, it's different. Some states still have some reservations to, devolving powers to ULBs. They feel there's no capacity, so we have to work for them. Whereas some states, I think, Madhya Pradesh, for example, is seemingly more willing to help the ULB capacity so it's quite mixed, and we try to find some good examples, and then try to use such good municipalities as a sort of lighthouse, so to say, to help others to follow suit. So it's really, we have been trying to develop more power. Constitution definitely mandates the states to give more power to ULBs. I would say still a long way to go.
Oh, good. So here my question to you is, being you in the ADB, you understood the government program, you have seen the smart city mission, you have seen the Amrut scheme and other government scheme. Will these able to fulfill the growing urban development demands? Are these government program are sufficient?
No, as I said, India needs, annually 2-3 lakh crore urban infrastructure investing. And when you talk, smart city, how much is the total funding requirement? I think it's 2,000-3,000 crore. So, but it's the right direction to start with. But in a sense, the situation in India is still, start with, I don't want to say, but relatively lower base. So smart city Amrut is the right direction. Then Amrut also mandated, many municipalities to do urban master planning and also property tax reforms. But again, since the municipalities are not well equipped in terms of human resources, it's quite challenging.
So, what point of improvement would you like to suggest to Indian cities to make while preparing their financial statement? What are kind of suggestions you wanted to have it? All the smart cities, municipal bodies.
No, I think there's a strong drive, this smart city 100 and 500 Amrut, since they are getting central funding. So there has to be some conditionality of sound, accrual-based financial statement. I think at least 100 such smart cities are doing okay, but more, 500 Amrut cities. That I think there are lots to be done.
Okay. So I think very well covered by you, sir. Now my question again to the Srikanth is that he is very much advocating the chartered accountant point of view. That's only the CA can work on this particular subject. So now, Yukamaji, will you agree with the Srikanth? Chartered accountant as a professional can do in this area, and you are involving the consultant, like MBAs and others. Why not consult the chartered accountant and mandate them to work in the smart cities? So, what are your thoughts about it for the chartered accountants?
No, I think in terms of capacity building, system development, definitely financial management expert, chartered accountant is quite useful. So we hope they're more engaged. But I think also the other side of the requirement is state government also needs to be more proactive. They say that they need infrastructure, so they please provide money. But somehow they're not necessarily keen to develop the sound financial management systems within the municipality. So that's something. We try to more and more advocate for the states to come forward.
Okay, so now Srikanth, what role CA can play in making Indian city a financial sustainable?
Sir, I think CAs have a huge opportunity in specializing in public finance, because private finance is a very small percentage of public finance in India. And for the next 20-30 years, governments in India will be raising a lot of resources and spending a lot of resources. Chartered accountants are very well positioned to help governments raise those resources and help governments spend those resources well, give assurance on how well those resources are being spent. Particularly in the case of cities, they are in as Mr. Yoma also mentioned, they are in a very low level of maturity presently. And chartered accountants specialize in building capacities of organizations to put in place good financial systems and processes. I feel this is a hidden opportunity. This is a hidden opportunity for chartered accountants. And there are 4,500 such entities in India. And in the coming 5 or 10 years, there may be another 1,000 as more villages urbanize. So it's a huge opportunity. Each of those cities will need at least a few chartered accountants to help them in various aspects of not just accounting and auditing, but also in project financials and merchant banking, helping them to raise funds, etc. In fact, I know that it's a chartered accountant who worked very closely with the Indore Municipal Corporation to help them float a bond. And they are one of the better organizations in that sense, better run municipalities in that sense. So, and we have a railway minister who's a chartered accountant. We have a former commerce minister who's a chartered accountant. And
Srikanth, I think very well said. Chartered accountant can definitely play an important role. But before that, how? My point is that, I am a chartered accountant. Okay. So how I can tap the opportunities? This opportunity will come directly to me? How I go to meet the people? How I go and meet the people? And what kind of advice it is going to require? How to, it's there. See, for everything is the demand and supply is there. Okay. I can, chartered accountant be there for a supply side, whether demands also exist. My question one. Number two, demand is there for supply. How better efficient supply can be provided. What are ingredients are there in the supply? What kind of, things are going to be required. So I'm asking you from Madam has said that SEBI regulations. Definitely, these areas will come in the play to raise the fund. But I'm talking about in complete whole sense, as I am a chartered accountant, okay, in sitting in Mumbai, how I tap these opportunities. You explain me, sir.
So two things. One, I'll repeat what I said earlier, which is start looking at public finance opportunities seriously, which means understand government accounting, understand municipal accounting better. That is one. And that is not rocket science. That is much simpler than private sector accounting. So chartered accountants can learn it very easily.
I said 1,000 people of chartered accountant got the certificate course on public and government financial management. 1,000 people came into the market as a supply side. I'm asking how they can tap the requirement as a demand side.
Sir, see, I work with governments on a daily basis. There is no demand in the government today. We will have to create that demand also. Unlike the private sector, where the demand and supply is somewhat equitable, in the government sector, they still don't understand that involving chartered accountants will help them raise their resources and perform better as municipalities. For that, we have to do advocacy. The institute will have to do constant advocacy with municipalities through communication and engagement. There is no other way. Because today there is no demand. We have to create the demand. We have to continuously go to them, show them the value that chartered accountants can bring. So there's a lot of, publicity and marketing that is required of the value that chartered accountants can bring. And that I feel is much better done by the institute themselves, and of course with support from the central government, etc., than by individual members. And folks like us would be very happy to work with the institute to make that happen.
Thank you, Srikanth. I think it's a well-covered, detailed program where the Kenichi Yokama has covered the funding agency perspective. You had already covered, advocating about the chartered accountant, how they can make a difference in the government building up. The Asa City about the SEBI perspective, what the rules, regulation, and the ease of it doing it. So I now request the all CAs to look at the document which we came out publication, Municipal Bond on Financial and Urban Infrastructures. It's detailed, booklet. You read it, see the IDBI website, ADB website. ADB website is complete exhaustive. In the last webinar, we had expressed what are the opportunities for the chartered accountant as a consultant are there. This is the benefit opportunities. And where the Kenichi also mentioned, we need a standard financial reporting system. And where the Srikanth has also mentioned, we need a standardization in accrual accounting system and WM and ICA role perspective. Where the Srikanth has mentioned the ICA more role going to be required in the public and government financial management. I would like to hear some bit again. As a ICI, we have the different body as a government functioning kind of thing. Some, Chandrasekhar Chitleji handling the corporate affairs ministry, like because they have a committee. Like this committee is handling all the government, public and government financial management. I can give a trust what none of the education institute or professional institute or any regulator body did travel so much in this government and financial management. No other body has can do it, because we did everything, every possible. Now it's a turn, as the rightly said by the Yokoma, that we are struggle in the various state government laws, and we need to redefine them. We need to rework them. I made a submission to the central ministry to form a GST council things for like a GST council, like for the municipal council thing, where they can form a committee where the all state going to be part of it, and in the every states, and come the policies from the central, and it's going to be in the central. Like we have faced the GST, now it's covering by the GST council. Same way, I request Yokamaji, let's begin. My ICI and the NGO all have to work together. Like SEBI have to work together to India come into the one objective, accountancy and transparency in the system, and having a sustainable project in India. With this, I think once we all together work in this same direction, going to be helpful for the India. So thank you very much. Now I have my co-committee chairman, Chandrasekhar Vichitle. He is having vast experience in this particular arena. He is having knowledge because he also been connected with the corporate affairs ministry. I request him to propose, he give the direction as well as propose a vote of thanks to each and everyone.
Thank you, Chairman, sir. I think as far as summing up is concerned, you have already done in last 5 minutes, so I do not want to repeat sum up once again. But let me tell you that ultimately accounting aims at measurement of your performance in objective terms. And this particular performance, the political leadership, the administration, they need to subject themselves to such financial measurement. Whenever union budget is presented, there in terms of money, we are told that so much is allocation for education, so much is allocation for health, so much for infrastructure. So ultimately what the people demand that yes, we find that you are spending some amount, but what is the outcome of it? We also need outcome. Outcome as well as this accountancy go hand in hand, and that importance has to be understood by first the political leadership. Once the political leadership understands this particular thing, automatically it gets translated to the administration. So maybe besides this giving inputs to this administrative officials, I think if we can interact with ministers, with members of parliament and the elected members, that would be more useful. Srikanth also mentioned some names of ministers who are chartered accountants, and those are ministers at present or maybe past. I wish that Srikant could also tell who are the ministers of and chartered accountants in future. Maybe we will see, if we see them in abundant measure, we don't have to canvas. There will be automatic acceptance for this particular system. So people like you who are working in public offices, or our chairman who is also dynamic in this field, I think you also can think in this behalf. So members, I really thank for this wonderful program where we have released this particular booklet on municipal bonds for financing urban infrastructure, India, an overview. As a quick thought, I feel that if we get this particular booklet translated into regional languages and sent to various municipalities, maybe they will be able to read, because it is ultimately their initiative that will throw open the opportunities. So if we can think in these terms, then maybe those who are governing various municipalities, particularly the political leadership, they will be able to understand what are the benefits of this bond funding, and then there may be greater acceptance. So maybe at committee level we can think in these terms. To the authors, those who have contributed, like Srikant, we can take their inputs as well. So, and subsequently we have already discussed the roadmap for financial sustainable cities in India. And this particular aspect, it was not a monologue, but it has been a dialogue because of various issues deliberated by the panel and initiated by chairman. So I'm really thankful to all of you. Mrs. Asha Shetty, who is associated with Securities and Exchange Board of India. She shared her first-hand experience and also enlightened us about the role SEBI is playing and the proactive manner in this particular arena. As far as mutual funding agencies perspective has been ably presented by Kemachi Yokoyama, who is heading this Asian Development Bank as far as India is concerned. I really would like to place on record that we are really grateful to Iadb for their active association with this committee and with the institute. And whenever we want any help, any presentation from Iadb, it is readily given. And I'm sure that chartered accountants are closely associated with Iadb, and they are working to the expectation and to the satisfaction of the Iadb. And with such interaction, I think that level of satisfaction will increase in days to come. And lastly, as far as CA Srikant Vishwanathan is concerned, he is our regular contributor, and he has played playing a pivotal role in this particular field. So we really want Srikant wanted Srikant to join this and other initiatives for a simple reason that theoretical aspects can be dealt with by anyone by reading the books and making some Google presentations. But those who work on the field, their words of advice are really coming out of experience, and that experience sharing matters for the practicing chartered accountants and all those who are attending. So thank you, Srikant, for sharing the wisdom and the experience at the ground field level. So, and all the participants who have participated and attended this webinar, I thank them. I thank our chairman Guraj Khandelwal for in conceptualizing this particular seminar and running it through and initiating the useful discussion. Our office, Namrata, Nikita and others, they have also exerted for this particular seminar. So they also,
Kenichi Yokoma for sparing a valuable time in spite of having busy schedule, and in spite of the secretary of MODA has cancelled, but he didn't cancel the entire his schedule. He graciously accepted the things and presented over here in this. So from bottom of the ICI committee and ICI, we wanted to thank you from honor. So thank you very much. Thank you very much.
Once the pandemic recedes, we will definitely like to meet you, all of you, in person, so that there would be better interactions. So let us hope that the vaccine comes and we are in a position to interact physically as well. So thank you, and have a nice day.
Need guidance from Iadb.
Thank you.
Thank you very much. Thanks a lot.
Thank you very much.